how to be positioned in his view in the markets. You talked a bit about gold. Let's talk more about gold right now. It was a big story in 2024. Investors who were positioned there did well. You think that story continues in 2025?
I think that there's definitely a relative safety to gold here, and I think evidence of that is the relative resiliency it's shown in the last couple of months. And so you go through periods where gold is the last thing you want to own, and I think you go through periods where it can do really, relatively well in uncertainty. I think what's interesting about the gold price here, as much as it has run and the gold stocks are starting to pick up, the general, sentiment towards gold is not anywhere near euphoric or as excited as you would see in previous tops. Mm-hmm. And so I think at the same time, the gold has run. I think it would be, more than healthy if gold was able to consolidate in a range of $50 or $100 around here. But I think the gold equities themselves are still very depressed. Mm-hmm. I think a lot of that is then still the concern about rising costs in the last couple of years. And you're now starting to see some of that abate with sort of lower commodity prices. But I still don't see investor sentiment really excited about gold. And so that gives us a little bit of confidence that there's more durability to where gold is. And I think, again, going back to our initial segment, is that I think uncertainty is not going anywhere. And I think for people that are underallocated to gold, I think having a small positioning in your investments, I think is a way to be able to protect yourself, and especially given the relative strength that is shown in the light of the last couple of months.
And does that mean exposure to gold equities at this point? You said that they're still soft compared to the metal itself.
Yeah. So the way we've been positioned in gold for the last couple of years is we've preferred the royalties, specifically because we felt the last couple of years we're going to see rising costs. So gold was going up, but costs were going up as well, which makes mining gold or other commodities a very tough business. And so the royalties have done well, but generally what happens is that at the beginning of these moves, the royalties are where investors are much more comfortable sort of hiding out because they're higher quality. They have far lower capital intensity needs during at the beginning of an upcycle. But we're at the point now where the miners are starting to look attractive because valuations are so compressed. And if you have gold able to hold at these levels and you have costs come down, and considering how under-owned the equities are, the miners, I think that's probably where the next leg of this goes. And we're not positioned there. We're very happy with the royalties we own, but it's definitely something we're watching, and that's sort of how I would expect the sequence to start to play out, is that the miners now start to show good relative strength.
Do you ever invest in silver or silver miners?
So we don't, or we have at times in the past, but right now specifically we own Wheaton Precious Metals, which does have some silver streams on them. And then the other one we own is a Cisco Gold Royalties. And so we don't own any silver producers now. I think the price of silver has been relatively strong as well. And I think the fact that they're both moving in tandem, gold and silver, with good relative strength against what equities are doing, I think is another signal. Where a clear upswing in the metals would be is you start to see silver outperform, which I don't think we're quite there yet. And I think that there's a lot of reasons why even a slowing economy or an industrial recession might hurt demand for silver. But I think the relative strength of both silver and gold is starting to, I think, be an important signal for investors to be considering.
Okay, let's talk about tech. As I told viewers a short time ago, the NASDAQ composite now down 6.5% so far this year. Does this come down in tech have legs, so to speak? Do you expect this to continue?
Yeah, I think that, so tech has been weak this year, but I think at the same time, we have to be fair. Any investment managers have to be fair and sort of highlight how dominant tech has been the last couple of years. And so, it is natural that tech should come off first, given how much it's appreciated. I think, and we talked about this the last time I was on, the issue with tech is now not just that everyone owns it, and some of the stocks they're great businesses, but they are expensive, is that you're now starting to see this concern about the AI CapEx cycle start to feed through. And I think when, as a signal, NVIDIA, all of last year in 2023, whenever they would have great earnings, you'd see the stock explode higher. And it still wasn't, the market still was not pricing in how good the numbers were. And they had pretty good numbers the other week, and the stock was really hit. And so you're starting to see changing sentiment about how these individual companies are reacting to earnings. And I think, I mean, it's not a genius comment to say a lot of these stocks are overowned. And I think there's a lot of people that own these stocks that are not actual tech investors, but have been able to participate in this move. And I think, the valuations are high. They're great businesses, but the valuations are high. And so if you have sentiment change, I think that tech can be an easy source of funds for people looking to raise cash and take profits, et cetera. And so I think that the move lower in tech does have legs. I think it doesn't mean that investors should rush out and sell whatever businesses they own. But I think you can't see something go up like that in the last couple of years without expecting some bit of a give back here, and that's what we're starting to see.
I know we're out of time, but I'd love to ask you what your thoughts are on Celestica, which has really collapsed over the past week and a half, 2 weeks.
So I haven't seen any news on it recently. I haven't been following it in the last couple of weeks. So we had looked at it. It's always one that we look at in trying to stay on top of what Canadian technology is doing. And the sort of bellwether that we've owned for years is Constellation Software. I think the problem or the issue, I'm sure Celestica, my guess would be, there again, the concerns about the cycle and where their exposure is, and you've probably had a lot of people rush into that name, hiding out, and that's now starting to come out.
Okay, Celestica down, as you can see, nearly 40% over the past month. Up next,